Okay, welcome to our weekly update. This is going to be for the week of March 30th, 2015. Just as a quick reminder, you can always go to etfinvestingadvisor.com. Feel free to take a 15-day trial at any time where you can have access to everything you're going to see I'm showing you here today, plus a whole bunch more. So just check that out and let's dive right in. So when you log in on your trial or as a subscriber, you've got several options here, and the ETF heat map is where we can see every ETF that we track, and then we have them broken down by asset classes or portfolios. So today I'm going to cover some portfolio choices. So if we click into there, one of my favorite and simplest is the stock or bonds portfolio strategy, and this just tracks two of the large ETFs. One, of course, that tracks Treasury, and one that is all U.S. large cap. And if you've watched our videos, you know that what we're looking for are double green, basically, to be in the buy zone. Obviously, two solid greens is the strongest buy, but this is certainly the second strongest buy, and a ranking category of 1 or 2. So this would tell us that if we're just focusing on this strategy, we should still be remaining long the 20-year Treasury bond, iShares, and the U.S. large cap ETF. And this has been this way for numerous weeks, so we've been catching this strong move for quite some time. And despite a little bit of a backtrack this week, nothing has really changed in that formula. Now you can see the portfolios can be broken down a variety of ways. We've sectioned them off into global regions, a bond portfolio, something that we'll call tactical asset allocation, which you can see kind of covers a lot of things from gold to large cap to bonds to small caps, etc. And again, you're going to see there's a very large range here between the strongest areas and the weakest areas overall. Another section that it's very popular, of course, is always going to be low-cost ETF funds, because there's no question that this is going to be the way to get the best overall long-term gains. So you'll see right now that, no surprise, a very similar fund that we had up above is double green. And then, of course, we've got REITs are still a buy. The broad market, still a buy. U.S. broad market, by the way. There's a very large disparity between U.S. and international right now. And then we start to weaken here a little bit. Would not be in this U.S. aggregate bond. It is ranked number 2, but you can see it's softened quite a bit, and we would definitely be out the international equities and out emerging markets. So one thing you can do is you can see you've got potentially 6 positions here. So one of the things I like to suggest is if you were to allocate your portfolio into 6 pieces, and really in this case we would be holding 3 of the 6 funds at this time. The other half would be in cash. Now of course we would go to green if that occurs. And that's one way to do it. That's not the most aggressive way. The most aggressive way is to realize that the reality is probably we're not going to see all 6 of these line up as positive. So what you could do is you could break your portfolio down into 4 pieces instead, and you would trade, of course, the first 4 to be double green. So in this case, you would be long or buy 3 of these ETFs, so you would be in the market 75% and flat or in cash on 25%, waiting for one more of these ETFs to turn green. Of course, we can absolutely get in this situation during a bear market where our market exposure would be well under 100%, 75%, 50%, and so on. So to me, those are 2 suggestions on ways to really handle this type of data, and it makes it super simple, because don't forget, this is updated just once per week, and the rankings don't change quickly. As you know, you don't want to get into the game of active trading, day trading, or anything like that with ETFs. This is about medium to longer term holds, but we're absolutely looking to have our cash in the strongest performing ETFs and absolutely out on the weakness to real weakness, and to avoid that. And one of the great things about the ETF Investing Advisor is it just makes it so easy to follow, because everything is just so nicely color coded. You really just can't beat that. Let me just show you real quick, and then we'll wrap the heat map. And this is kind of neat because it shows all the ETFs that we track, and it puts it into basically 5 different quantiles or quintiles here. So you've got ones, the most powerful, the strongest, and of course you can see all these here. Then you've got your 2s right here, but then of course you can see you have a lot of ETFs that are going to fall in the 3s, the 4s, and the 5s. Right, and this might be surprising to some people because you're always like, well, I should just be in my ETFs or holding my investment. But I can tell you right now that anything in the fives here is underperforming, has underperformed for weeks, if not months, and is more than likely going to continue to underperform. So to have your cash there, really is a wasted opportunity overall. We want to really focus on where the strength is, where the momentum is strongest, where the long-term trend is high, where the power score is high, and then we can do that very much on a visual basis with the colors. So that's it for this week. Let me know if you have any questions. Hope to see you in on one of the trials or subscription, and we'll go from there. Great trading this week.